welcome to this month's episode of Fintech Firebrand. I'm Virginie O'Shea, founder of Firebrand Research, and I'm here to chat to you about May and June's finreg and fintech news. Now, this last month has been very, very busy from the perspective of monitoring what's going on within the ESG environment. We've had on both sides of the pond, we've had some large enforcement actions that have happened. The SEC was the first to go earlier in May with regards to fining one of the large investment managers in the US for what it called sort of greenwashing practices. So certainly that was a big enforcement action, the first one we've seen, in fact, on the topic of ESG of that magnitude and that scale. And then a week later, we saw BaFin in Germany take action against or raid a particular financial institution there, DWS, with regards to greenwashing and ESG infractions, as was stated by the regulator. So certainly we've had a lot of progress over the last 12 to 18 months on regulatory discussions, shaping up of things like CSDR in the EU, which is the new sustainable finance regulation that's coming into force gradually over the next few years. We've also had the SEC putting out a lot of its papers, as I've mentioned on previous episodes. This time now we're seeing enforcement action. And as we all know in the markets, I'm sure, when enforcement actions happen, they tend to drive a lot more compliance, a lot more focus, and a lot more investment in certain areas. With the regulation, there's always the groundwork, but when it comes to enforcement, you tend to see much more activity. So it will be interesting to see which regulator will be next up at the bat with regards to enforcement. I think I made a joke earlier in the month that once the SEC took that measure, the EU was bound to follow, and lo and behold, it happened a week later. So certainly there has been a lot of focus from the regulators on trying to get the industry engaged in a lot of its consultation papers and things like that, and around topics including climate risk. So certainly there is a lot of focus from regulators. Interesting to see that Bloomberg intelligence figures indicate that in May we saw $2 billion of outflows from ESG, almost the exact amount that we saw inflows in December of last year. After COP26. So certainly there seems to be a bit of a hokey-cokey going on with regards to fund flows around ESG at the moment. So interesting to note that. Wonder what the enforcement actions will have as an impact on this area as well. Will it encourage more investment or less investment? It will be the next few months will tell us a lot more about that. Another finreg point of interest, in this first week of June, ESMA has indicated that CSDR, another topic I talk about quite often, they are going to be delaying the buy-in regime, the mandatory buy-in regime. We thought it was sort of off the table or just in consideration at the moment, but ESMA has now indicated that it is in fact being delayed by 3 years. So unless they see significant progress, I don't expect that to go away. But we anticipate that in 2025, we'll see the implementation of the mandatory buy-in rules, which should come as something of potentially a surprise to some in the market. And I imagine there'll be a lot of feedback from the markets to the regulators about the logic of introducing that regime. Hopefully in the interim period, we'll see settlement penalties regime having a significant impact on settlement efficiency rates across the EU. And also, for that matter, we're going to be seeing a lot of focus in the US with regards to the move to T+1. So certainly keep an eye out for that going forward as well. Now, in Asia, this month, we've also seen the Monetary Authority of Singapore releasing more guidelines and building on previous guidelines that they've had around business continuity management and operational resilience. Now, we've seen that as a topic across the globe, being very, very important in post-pandemic, also with regards to the developments around cybercrime, ransomware, denial of service attacks. We've seen outages. across some of the market infrastructure. Certainly there's been a lot of focus over the last couple of years on this topic, and the Monetary Authority of Singapore has previously put out guidelines. This is just building on top of those guidelines, more suggestions. It's a consultation period that they're going through as well. So certainly looking for industry feedback from that perspective too. And I imagine they will be talking with their counterparts in other parts of the world that are also implementing things like the Digital Operational Resilience Act in the EU, which has been a big topic of conversation over recent years as well. Another interesting development with regards to regulatory compliance, regulatory reporting, has been the creation of a new association. Now it's called APAMA, and it represents the members, I think it's 6 different members of the ARMS and the APA, so the approved reporting mechanisms for reporting under MiFID. Now, these are becoming increasingly regulated from the EU level and from the individual national competent authority level. So there's been a lot of pressure on these different entities to increase their resilience, to increase their investment, and a lot of focus on enforcement from the EU level as well, especially around ESMA's oversight and direct oversight of some of these entities. So it's not too surprising that there's a new association on the scene representing the interests of these organisations and providing a sort of a conduit for feedback to the regulators and coordination amongst the different members. Another interesting development last month, towards the end of May, was the CFTC roundtable to discuss FTX's proposals for non-intermediated clearing. Not very easy to say, but certainly something that was debated for several hours with representatives from the CFTC, various other bodies, and also industry participants, including FTX. Certainly there was a lot of interesting discussion that went on about current models, whether CCPs are effective was another sort of dimension there, and also the clearing setup and whether we should have 24/7 real-time clearing capabilities, and especially for crypto assets going forward. Now, certainly the ball is in the camp of the CFTC. They set up the roundtable to hear industry participants providing feedback on the FTX proposals, and for SBF from FTX to be very detailed in his descriptions of what his proposals were, and for there to be some industry discussion from other members of the crypto community to sort of air their views as well. So certainly it was a very interesting few hours. It'll be now up to the CFTC to report back, to have some discussions probably with fellow regulators like the SEC, and decide what the outcome will be of these proposals, whether they will approve them or not. It was hard to tell during the roundtable whether the CFTC was falling on either side. So certainly we'll be keeping out an eye for those feedback items in the next month or so. Now, for my final thoughts today, it's Pride Month, and there's been a lot of discussion within the regulatory community about diversity and inclusion. Certainly that is a very important topic, I think, for every financial institution, every regulator, and every market participant out there. Certainly there has been a bit of a backlash against ESG, and to some degree there has been public criticism of the compatibility of topics such as diversity and whether they should be front and center of investment decisions. So it's interesting to see sort of this woke agenda as it's being described by its detractors. And I would say you need only look at a few of the individual regulatory proposals as to why there is alignment between financial goals and also D&I initiatives. So one such effort was on the part of the Bank for International Settlements. They put out a paper towards the end of May looking at this particular topic, and they stressed that D&I was not in opposition to prudential objectives from the banking industry. It is in fact fully supporting those objectives. So some of the points that they made, I think, are worth noting are the improvement of diversity of thought, the avoidance of groupthink during risk management decisions in particular, lots of positives around being able to challenge different areas, particularly when making business decisions. Fairer treatment of customers is another area that is something to bear in mind with regards to the D&I agenda. With a broader, diverse group at the top, you're better able to understand and empathise with your client base of all shapes and sizes, whether institutional or retail. Also improved governance and enhanced internal processes around that. Another D&I sort of benefit there too. As I say, better decision-making from the risk side and better decision-making from the business side, because you have a well-rounded group of individuals that have different perspectives. There's also, along with that, reduced reputational and legal risks that you may face as a result of better decision-making. There's also, of course, we've got a lot of discussion about safety and soundness, operational resilience. That also plays into this space too. And for that matter, with a wider spectrum of experience, you may get much better product innovation because you're pulling from a wider pool of experience, a wider pool of understanding of different types of clients and customers. So that is definitely something to bear in mind, and that sits also with the long-term goal of financial stability. So a few items of food for thought there, certainly from the BIS paper, but I would encourage you to read it, as I encourage anyone to read all of these kinds of topics, because certainly very important for the future of the industry and innovation and better decision making. So.